So let's jump right in. I have 5 panelists here with me today who cover very different topics from retail to quantum tech to healthcare. We have Alex and Matthew from our editorial team. We have Laura, who's our expert on the retail industry, Alex, who covers healthcare, and Thomas, who is from the energy and industrials team. So as you can tell, we have people from very diverse backgrounds at this roundtable today. And I would like to start off with the most pressing question on everyone's minds as we enter into 2023, which is the current market conditions and economic uncertainties. There's a lot of uncertainty as to what this means for early stage startups, but also for more established vendors. Let me start with Alex and Matthew, as you've worked closely with our Tech Trends report this year. How are today's market conditions impacting the tech space at large?
Thanks, Deepa. So stepping back a little bit, 2022 was in many ways the year that the rug got pulled out from under the tech sector. After years of a grow, grow, grow mindset, the reversal of market conditions has posed a harsh new reality for tech companies, which we've seen manifest in layoffs, tech valuations being cut, canceled IPO plans, and the seemingly endless parade of billion-dollar unicorns basically coming to a halt. I think many people are looking at 2023 for a renewed sense of momentum in the tech sector. Those startups and big tech companies are having to play by a completely different set of rules. Now the focus is on survival and how to gain an edge.
Yeah, no, I completely agree. There's definitely been trains in the wind. I mean, of course, we've all seen the headlines about companies cutting costs and struggling to raise new funding. But at the same time, lots of companies are responding to the current economic conditions by casting a wider net to find new cash flows. So, for example, startups that typically target consumers are now ramping up their efforts to cater to enterprises as well. Others are adding services to build wider moats in an attempt to lure consumers into their ecosystems. So this expansion is partly a way to diversify business lines and hedge against market uncertainty. But companies are also seeing opportunities to actually hit the gas on some growth plans that they might actually have had for a while. So yes, startups are becoming much more disciplined in how we spend money, but we're not in full retreats, and some are even finding new ways to grow.
Thanks, Matthew. I think what would be really interesting is to take what Alex and Matthew just spoke about and put that in the context of specific industries. A lot of people want to know, what does this mean for me today? What does this mean for my industry? So Laura, let's start with the retail sector. What tech solutions are top of mind for retailers now in the current market scenario?
Yeah, I think that what Alex and Matthew have said so far pretty much sums it up for retail as well, particularly when it comes to tech solutions. They're looking for solutions that will save them on costs or will offer a new revenue stream. So that idea of casting that wider net. When it comes to cost saving, it's a lot of the automation technology like unattended checkout, or even synthetic media, or sort of any kind of automation for e-commerce that is going to help drive efficiencies in retail. HR tech is also important as you think about retailers, their stores, their fulfillment centers, really looking for people to work. They're looking for good people to work, and they're trying to retain them. And so there's a lot of HR platforms that are helping reduce costs and make everything more efficient on that front. And then when it comes to new revenue streams, I think one of the best examples we just heard last week, where Walmart is partnering with Salesforce to sell some of Walmart's technology when it comes to e-commerce, store fulfillment, delivery. Walmart is also part of the explosion in retail media networks, and that the role that those networks are playing in finding more profitable revenue for retailers.
Thanks, Laura. So broadly speaking, is it helping me cut costs, or is it helping me generate additional revenue? Alex, you cover the healthcare space, which is very different from the retail sector, specifically hospitals and providers. How do you see this playing out there?
Well, it's funny because when we talk about these issues of how do we find efficiencies, how do we find new revenues, obviously that's hitting the healthcare sector, but I think the specific challenges of the healthcare sector are making the tech that's needed, and the ways that it's developed a little bit different from some of these other areas. Within healthcare, we're seeing similar drives towards more automation, towards more efficiency, but they're more in terms of reducing the amount of burden and the amount of extra uncompensated work that providers, doctors are doing, whether it's asynchronous telehealth like Amazon Clinic, remote monitoring, ambient scribes and documentation like Microsoft's Nuance DAX. These are all things that increase the efficiency of current staff, but you really can't automate those roles completely. And so it's more about giving them more time for the actual work that requires a skilled provider to do. We see similar things in RCM with automated coding, AI denial management. It's more about mitigating a lot of the busy work to enable the human factor, the real skilled roles to play a bigger part. When it comes to generating new revenue, a lot of that is coming from the opportunities generated there, being able to allow providers to see the most acute patients rather than, have their time filled with patients who just, need a refill or can see a different kind of provider. Having AI or software that can manage that flow really does open up a lot of opportunities for an organization.
We'll talk about some of the trends that you mentioned, such as ambient monitoring, a little later. But first, I want to ask Thomas, who's here from our industrials and energy sector, how do you see tech buying decisions being impacted in the current market conditions?
So there are two big trends from 2021 that have continued to play out in 2022, although with slight shifts in their focus. The first is a push towards sustainability. In 2021, we saw record inflows into clean energy and climate tech companies, mostly going to renewable energy. But with high oil and gas profits in 2022, we saw renewed investment in that area to do things like driving down overall emissions in the space. For instance, we saw the likes of Schlumberger invest in LiDAR tech companies in order to detect methane leak and emissions from methane. The second trend is somewhat related to the first. Broadly speaking, companies are looking for ways to better manage their energy consumption. So we're seeing non-traditional energy players like Google, Ford, GM are partnering with energy companies to, for instance, develop and promote building energy management tech.
So what's evident from what all of you said is that despite the uncertainties, or especially in some cases driven by these uncertainties, there are certain tech applications that are going to be important this year, whether it's energy or healthcare infrastructure or generative AI, which we've already gotten a lot of questions from registrants about, and we'll be talking about briefly in our Q&A. But I want to first start off with one of the trends that we mentioned in our Tech Trends report this year, which is super apps. So if I can ask Matthew and Alex, if you can tell our listeners what super apps are and why this is something to watch this year, and what opportunities it presents for different sectors.
Got you, yeah. So in essence, super apps are all-in-one platforms where users can access a broad range of digital services from a single place. Like for consumers, the main basic appeal is just convenience. And the concept isn't new. Like lots of very popular super apps exist around the world, such as WeChat in China or Grab in Southeast Asia. So far, though, no super app has really taken off in the West. But what we're starting to see now is lots of companies, especially tech incumbents, deciding that we want to use the super app model, or some variant of it at least, to further monetize for users. So Companies such as Microsoft, Meta, Apple, even Twitter are already making various moves in the super app direction. And ultimately, what we all want to do is facilitate as many transactions as we can, and then, take a cut. So in practice, this means controlling search and discovery, offering access to more services, and really keeping as much of the customer journey as possible within the ecosystems. And doing well across all of these factors is a really tall order, but if a company can actually pull it off and consumers actually like it, then it could secure a really significant moat for them. There's definitely a big prize on the table.
We're also seeing this play out in specific industries, fintech being a pretty prominent example. So I think Klarna is a really instructive example to talk about here. Klarna, for those of you who don't know, is a leader in the buy now, pay later space, which has grown massively in the past few years. However, at the same time, buy now, pay later is facing increasing pressure from regulators. We're seeing more loan delinquencies from consumers, especially as the economy has soured. So in face of these challenges, Klarna is essentially refashioning itself into a commerce super app that spans the customer journey from product discovery to loyalty and rewards. It just rolled out actually a tool to compare prices on products, shoppable video, a new platform connecting retailers with creators and influencers all through its app. So by moving from being an option on checkout to this sort of super app with a whole suite of offerings, Klarna is not only hedging against the possibility of the buy now, pay later market taking a hit, but also opening up a handful of new revenue streams. And this isn't limited to fintech companies either. I think in the next year, we're going to see a lot of mid to large sized companies, for instance, Zillow in the housing market, taking the same approach as they try to become one-stop shops.
Alex, you mentioned Klarna, so I wanted to ask Laura, how else are you seeing this play out in the retail and commerce space?
Yeah, I think super apps come up a lot in the discussions around retail. I think the biggest question that often comes up as we are all sitting here, in the US or more broadly sort of in the West, there's a lot of questions about what's the WeChat going to be in the West? What's it going to look like? And, I think there's a lot of interesting things that brands and retailers have done with WeChat when it comes to private traffic or small group chats that could be applicable here. But I do think that there's some mobile adoption and different ways that people use mobile, in other markets that it means it's definitely going to look different here. And so I think the example from Alex around Klarna is a really good one. I think the simple answer is it's going to come from less expected sources. TikTok, to a certain extent, is already kind of gone from being, a short form video site to a search engine to increasingly it influences purchases, and now it's leaning towards becoming live stream shopping and commerce. There have been job listings associated with TikTok related to fulfillment centers. So clearly they're trying to sort of reach their tentacles as far as they can into a lot, serving a lot of different purposes for consumers and for shoppers. And, I mentioned Walmart before, but they're another sort of, as Alex, referred to, sort of large company that's in other spaces. When you think about Walmart looking for new revenue sources, I think fintech could be one of those. They already have a payments app, Walmart Pay. Their new chief financial officer was previously CFO at PayPal. It's continued to invest in India via its stake in Flipkart, which owns the payments app PhonePe, which is growing its financial services offer. So, I think that they're the kind of retailer, kind of company that has reach into so many areas that we could see some form of a super app taking shape there as well.
Thanks, Laura. If you have questions on super apps or anything else that we've discussed so far, please feel free to start sending them in the Q&A tab, and we'll be reviewing them as they come in and answer some of the questions towards the end of the webinar. Moving on to healthcare. One of the trends, Alex, that you mentioned earlier was ambient monitoring or passive monitoring. This has been around for quite some time now. So I want to ask you, why is this something that we're watching closely this year, and what's changed in the market over the last couple of years?
Yeah, so this is actually a sector that, as you said, has been around for a while, but has really started to take off. Google introduced their Soli chip, which was originally their, centimeter scale radar, essentially, 7 years ago, and they really struggled to find use cases and to find, a really valid place for it. As the technology has evolved, as we've gone from centimeter to millimeter and sub-millimeter resolution, the ability to really distinguish and decipher really granular health information from a distance, completely ambiently, has really taken off. We can measure heart rate, we can measure respiration, really small movements to really get significant information about people. And as populations are aging, as it's become, a really significant business case to manage the health of people, whether they are senior citizens, whether they have chronic conditions, these technologies are really starting to play a pretty significant role. You don't have to rely on patients to remember to put them on in the morning. You don't have to rely on them to be charged, to be synced to a smartphone or to a local hub. They don't even necessarily need high-level access to the cloud if they are executing, edge AI or fog AI functions. So really, it's a combination of really significant evolutions in the technology and some realizations about what they can mean. Probably the other big factor has been the real takeoff of interoperable data standards within healthcare. That has enabled provider organizations, different stakeholders to access data, transform it, analyze it much more reliably, and that allows them to take not just the bare bones data or rely on providers to have the time to analyze it, but really transform it, make it actionable, and produce significantly better outcomes for patients.
Thanks, Alex. And I'm already seeing a few healthcare questions come in. We'll be starting our Q&A shortly, but before that, Thomas, I want to ask you about the energy sector. Particularly, we highlight virtual power plants as one of the trends to watch in our report. So can you tell us a little bit about what's happening in that space and what kind of opportunities is the tech enabling right now?
Yeah, commodities volatility has caused a shift away from centralized power generation. So this is things like coal or natural gas power plants to decentralized generation. So this is things like rooftop solar panels or battery storage systems. And this shift requires new tech to aggregate and control all of these decentralized and dispersed assets. And so energy companies have been investing in, starting to acquire and partner with startups that provide software that can control and manage all of these disparate resources and pool them into what's known as one unified virtual power plant. And so we see energy giants like Schneider Electric recently acquired virtual power plant leader AutoGrid. We're seeing, again, partnerships from companies that you might not expect in the space, like Google, Ford, and General Motors, partnering with energy companies to promote virtual power plants and standards around them. So definitely an interesting area and a lot more to come in the future.
Thank you. Thanks to all our panelists for giving us a brief overview of some of the trends. Let's jump to the Q&A and keep the rest of the webinar session more conversational. So feel free to put your questions in the Q&A tab at the bottom. We've gotten a lot of questions from registrants about generative AI. We'll post a link in the chat group to our generative AI market map, where we look at a little over 250 vendors in the space, which should give a good overview of kinds of applications that are coming up. And we'll also be putting out a few other pieces of research in the coming weeks around that topic that'll help clarify what's happening, where's the momentum, and where's the opportunity.
So just jumping in, looking at the first Q&A here. This is a question for Mario. We've got, do you think the growth expectancy for super apps is just focused in countries like the US and Canada, or also for markets like Latin America? At least talking about the fintech perspective, I think absolutely there's an opportunity in regions like Latin America, especially where there might not be as much penetration of or saturation of a lot of different competitors. For example, Nubank has been really successful in sort of tackling this super app approach and layering on a number of different products. I think the average Nubank user uses 3 or 4 different products, all from Nubank within the same app. Nubank's also spinning up its own cryptocurrency that it's going to release apparently this year. So a lot to watch for in that sector, but I think absolutely it's an opportunity. Laura, do you want to jump in here to talk about retail more broadly?
Yeah, I mean, I think that for super apps or otherwise, we are really looking at markets like Latin America, India, a lot of the emerging markets. I mean, I think if you read our report that we're talking about today, a lot of these emerging markets are where we see the most opportunity for growth in retail, particularly in 2023 and beyond. So I think the, you know, to the point of the person who asked the question, you know, I think the growth expectancies are going to be perhaps higher and, you know, starting from perhaps a lower level, but as you think about more retail digitizing and the opportunities to digitize more retail, it opens up opportunities for things like super apps, as well as, you know, a lot of the technology to literally digitize record keeping in a store, as well as, you know, enabling retailers or merchants to start their own websites and enable delivery in their communities. And so that is really where we have been tracking a lot of activity, and frankly, for the last few years. But I think heading into a market like what we're seeing for 2023, it really opens up, it might open up a lot more people's eyes to those opportunities. You know, I mentioned Walmart. Amazon is also really big into investing, finding ways to invest in India. You know, they can't just go in and open their own stores there, but finding lots of ways to support the local merchants and that sort of thing. And so this is not a secret kind of opportunity in these markets. I think there's a lot of growth potential there for sure.
Just to piggyback on the super app conversation, we're getting a lot of questions in the channel about super apps in healthcare. Are they coming? Are they even potentially viable? As one person points out, you know, we've already seen some companies trying to develop this, trying to expand their services, be more end-to-end, and have real trouble with it. In the broadest sense, no, I don't think super apps. I don't think a super app in healthcare is very likely. What I do see, however, is a significantly more unified experience. I think we're going to see a return to the provider or a provider group, a care group, as that central organizing metric, where, you know, your provider is going to assign you or prescribe you, you know, certain apps or certain activities. They're probably not all going to be from the same company. The data will probably flow through a data integration platform into analytics for different providers and different care teams to respond to. What I do think we're going to see isn't necessarily a single company that owns that, but we are going to see a much more unified single experience. I think a lot of that activity will end up being directed through a sort of central hub app, whether it's a digital front door, an evolution of current patient portal apps, or something new, simply because to get patients to use these things when it's significantly fragmented, when the user experiences are so different, when they have to jump from app to app, has proved to be really prohibitively difficult. When it comes to, you know, how that interacts with kind of the healthcare infrastructure ecosystem as it exists now, I think that ends up in a lot of ways supplanting the current central role of the EHR. It may be the case that EHRs end up being that sort of managing front end, but I think it's much more likely that they will be much more of a clinical workflow tool, one tool out of many being involved in patient care, sending information to providers. I think that's going to be what the healthcare version of this ends up looking like.
On this topic, there's a general question on, do companies planning to invest in new opportunities like super apps or other newer tech opportunities, or will they keep focusing on automating and enhancing existing digital journeys with the cloud? I think in the current market environment, especially, do we see an appetite, to generalize the question, do we see an appetite for newer technologies?
I mean, I can jump in. In general, I think, the broad answer is yes. I think I go back to a lot of what Matthew and Alex and I talked about right at the start of the webinar, where the technology, there's sort of a short and a long-term view for sure. Something that can ramp up quickly is obviously going to be a high priority. But I do think that in retail, at least, or in particular, the speed that things changed over the last 3 years, in my view, really lit a fire under a lot of retailers, or the smart ones anyway, to realize that a lot of the technology that they'd sort of been waiting to invest in, or saying that'll come, the need for that will come eventually, we'll just pilot it, really sped things along. And so I don't know if, it's a super app or cloud technology kind of discussion. I think it's a little bit of all of the above. And the fall off that we saw in VC, it doesn't pretend great things for tech, for investment overall, but I do think that there's a lot of focused discussions happening around how to drive efficiencies, and then at the same time how to boost productivity, find those revenue sources, and tech's going to play a big role in that.
We'll probably have time for one more question, but in the meantime, someone also asked about where to find the generative AI companies map. I'm going to post that right now in the chat group while we review the questions that are coming in.
So we've got a couple questions about pharma and developments in pharma technology. I'd like to just take those as quickly as I can. The first question, what do you see as the top 5 areas, top technology trends in pharma? This actually relates to another question. The first one probably is the microbiome. This is an area that is really starting to see some interest. I think really has a ton of potential, whether it's oral microbiome, gut biome, various parts of the body, home analysis or outpatient analysis, and using that as a first step towards really personalized precision medicine is, I think, really going to take off. That personalized precision component of the pharmaceutical industry is probably the second one that I would point to, as these diagnostic technologies really start to mature. The third one I would point to is probably in silico trial technology, as we start to get much more robust access to different patient data sets, the identified data sets, synthetic data sets. I think that's too valuable, too useful to the pharma industry to go away. What else? Direct to patient recruitment, whether it's self-recruitment, whether it's recruitment through easier recruitment through the EHR or through a doctor. Similarly, I think the the cost benefit analysis is too promising. I think that's, something that's really going to take off. And then the last one, I think that was 4. The last one is an increased integration of pharma with RPM and digital therapeutics. This is a trend that really took off in 2020. I think it's only going to continue. We're already seeing more and more involvement with pharma and life sciences companies in direct-to-consumer technology. I think we're going to continue to see that really grow.
I think we're almost up on time, so we'll wrap this up. We'll try to answer some of these questions later on as the ones that we've received so far. But thank you so much to our panelists for joining us and sharing your insights. And thank you for all those who attended and for all your amazing questions. We'll be setting out a recording of this webinar and the Tech Trends report, a link to it within the next 24 hours. So thank you, and I hope everyone has a great rest of your day.